Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So you are in Colorado for ETH Denver. So this is a rare remote Galaxy Brains for us.
I know. I got the whole buffalo behind me. I feel like a cowboy on Yellowstone.
Well, look, even though you're not in the office, it's been a big weekend and week for markets. We'll talk about crypto markets a fair amount as well. Bitcoin's down in the 86K range, so we'll get to that. But before that, I mean, there's a lot happening in traditional markets I wanted to ask you about. Even in the beginning of this week, when cryptos were falling significantly, on Monday and Tuesday, basically everything was down. Stocks were down. Gold was down. I don't know, man, what was up when everything was down? What were people buying with their sales of all these other assets?
Yeah, so you had a pretty meaningful turn in the U.S. equity market, and I think that's a function of folks reassessing their growth outlook for the U.S. Right? Folks are actually starting to get concerned with, how aggressive the U.S. economy is going to grow on and go forward, and kind of some of the metrics around that. But just starting from like a consumer, right? Consumption is a large part of the U.S. economy. You had January retail sales that were super soft, right? Then you start to think about the service sector of the U.S. economy, right, which is very robust. And you had services PMI last week print in contractionary territory for the first time since 2022, which was kind of the whole taper move that you had as we started to go from 0 to 5% interest rates. And so U.S. consumer is starting to look a little bit weaker. The services sector of the U.S. economy is starting to look a little weaker. Then you go on to housing, and you've had some relatively soft housing data in new home sales, right? And you're kind of at this point where in the equity market where valuations are really high, right? Like by any historical standards, valuations were super high. Positioning was very stretched from the standpoint of, if you look at cash balances amongst institutional investors, they're at very, very low levels, right? You had commodity trend following accounts that were likely big sellers on any move lower. Retail had done a significant amount of buying in January and February of this year in equity markets. And so you just kind of had this like perfect recipe of like data starting to look bad. That's going to hit growth, and stocks are priced to perfection, and folks started to sell stocks. Now, where it gets really interesting is kind of, if this continues, what is the possible, feedback loop? And one metric that constantly sticks out to me is that, about 50% of U.S. consumption is driven by the top 10 percentile of income earners, right? And so when you have like equity start to turn lower, there is a meaningful wealth effect that trickles down into the U.S. economy. And so, if you were to see an extension of this move in U.S. equities, it would actually become like even more self-fulfilling in a way, because you're just going to, a lot of the wealth of the top 10% is focused in equity markets and assets. And so, you're starting to get to the point where it's getting a little nerve wracking. And when you have that going on, like crypto being one of the most riskiest of risk assets that you can buy, right? Folks are certainly not going to want to, pile into magic internet money, pardon my language, when, the NASDAQ's off 4 days in a row.
Yeah.
And when you couple that with the fact that Saylor did a large portion of his buying already, in terms of it was announced on Monday that he bought $2 billion and his convert was for $2 billion. And so, he's a little tapped. And you had the Bybit hack, and so and then you've got the negative sentiment around memes, etc. And so it's kind of the perfect recipe for crypto to go lower. But what's really interesting as well, though, is part of the reason why we've had such a run up in Bitcoin is because Saylor has been buying, right? And his last corporate bond deal wasn't as well received. And his stock premium has started to go down. And so when Bitcoin prices go down, right, his ability to issue more equity and more securities in order to buy more Bitcoin actually goes down. And so it becomes this reflexive feedback loop into BTC price because of the setup
Right.
in the equity market. And so, yeah, we're in a very challenging spot. I think on a go forward, I'd be paying close attention to kind of the real stats of the U.S. economy. I think we're probably starting to turn meaningfully lower. I think the labor market is kind of where I'm super focused on, right? Because you've got Elon laying off a ton of people into the government job sector is going to start
Well,
to
it's
look
not
weak.
technically Elon, but yes, you mean the
It's not.
Doge initiatives. Yes, yep.
Yes. Right? And private sector employment, has been, steadily coming lower over the past year. It's really been the U.S. government and state and local governments that have been propping up the labor market. And so if you start to see that turn, that could be the trigger for much more in terms of, folks putting their homes up for sale and that triggering, a repricing of equity of homes, and then, that feeds back into U.S. equity markets. And so I'm paying close attention to the labor market, and I think that's softening. And another metric you can look at is kind of mentions of job cuts, like in news articles and stuff. And so you're starting to see some of those high frequency indicators of job reduction start to tick higher. And so I'll take a pause there. But yeah, I'm bearish on the U.S. economy, and that kind of makes me bearish on risk assets as a whole, and that includes things like gold. People tend to sell their winners when they're nervous about risk, and when gold's up 40 some odd percent in a year in basically a straight line, and you're nervous about owning assets, like, you're going to sell some of your winners.
Yeah, the things you made profit on. And if you had high conviction bets that are already not winners, like people often hodl those and think that it's still a good bet. And it may be, by the way, whatever it is. Okay, that's super interesting. And here's a follow-up here, Bimnet. I mean, if the Fed has a dual mandate, right? If let's say inflation's okay or whatever, it's mostly lower than it had been for sure. It's not at target, but it's lower. But the other part of the mandate is to, I don't know how I would say it, create policies that seek maximum employment, right? The labor market is from a statutory perspective is actually also part of the Fed's mandate. Now, I would say personally they have limited tools for this, but they have one very famous tool other than their balance sheet, which is rates. If we get into a deflationary cycle where labor layoffs give consumers less money to spend, or they have to then sell assets that they have to help live their lives, and that causes housing to go down and all this stuff, we can, I think, see how all of that is connected. If it goes that direction, what is the Fed's policy response, you think?
They're going to cut at least 3 times this year, would be my guess. And so they're gonna, take rates into the mid threes, basically. And I think that's going to be entirely warranted. I think the kind of price spike you saw in CPI to start the year was more a function of seasonal factors and wildfires and other natural disasters and things of that nature. And if you look at like metrics like Trueflation or like apartments.com, like average rent prices, and kind of the stuff that can help you kind of augment, the official statistics, like those things are moving lower in terms of price terms. And in terms of what we see ahead with the labor market, I do think there's material room for softening there. And so I think the Fed's going to be looking at core PCE that is around 2.5, which is close to target, all effectively at target, and a labor market that's going to be weakening. And so, like, if your idea of what neutral is somewhere around 2.5 to 3%, and right now interest rates are 4.30, right? Like, you're going to be like, oh, maybe we should get to neutral, and
Mhm.
that decision about like getting to neutral, the Fed likes to move gradually, but when it's cutting, like, it can cut by 50 or 100 bips at a time, because, like, why would you be in restrictive territory when you see all these signs of things cracking? And so I really do think that the risk is for more like of a 50 basis point move in the meeting that they cut next, or something even bigger. And so, yeah, the Fed is going to focus on its dual mandate. And I think in doing so, they're going to realize that they need to get to neutral pretty quickly. And neutral is probably at least 75 basis points away.
Yeah, it's a ways off. They've got to do some cutting. And then, we could talk about the balance sheet. I saw an interesting, the Fed balance sheet. I saw an interesting quote. I forget exactly what it was. Something about Besant having talked to Powell. And, I don't think it's not like there were minutes from that meeting, but the Fed is still tightening the balance sheet, right?
Yeah, they're still engaged in tapering the balance sheet, and that is because they increased the balance sheet by almost $5 trillion,
Yeah, yeah, for sure.
during COVID,
But that when
etc.
you
And
say
so
tapering, that means they're selling securities into the market, correct?
they're not. Yes and no. They're not reinvesting the securities as they mature off their balance sheet back into securities.
So they're reducing their buying pressure in the market at a minimum. Maybe other stuff too, right? Yeah. So that also though can contribute like to the weakness in the market, which is also a sort of a factor enhancing the reciprocity of a downward move, right? So like, do you think that they would stop the tightening?
I mean we're not going to go into QE anytime soon, and
I guess
if
that's
we
the question.
do if
I
we
guess that's the
do
question.
QE, it's going to be like more a function of like getting reserves into the market, not like outright purchasing securities, like in mortgage-backed securities and things of that nature. It'd be more along the lines of getting like front end cash in the market because the amount of reserves have become, not ample but like restrictive, and so I think that's a
Got it.
less pertinent policy point at the moment. The main lever they have is kind of the front end of the curve right now. And I think, they're normally they're very reactive and not proactive. And I think that's what you're going to see here is they're going to start reacting to the data as it turns more negative rather than like being like, oh, it looks like we think the data is going to turn more negative, so we should cut now. And that
Fair.
and to be honest, let's be clear, like if Trump and Elon like cut $1 trillion of spending from the U.S. economy, like that's bad. Like the Fed is not going to miraculously come out and like offset $1 trillion of less spending.
Yeah, that makes sense. That's a fair point. I wanna get Bimnet before we wrap, I wanna talk more specifically about Bitcoin and cryptos. Obviously, Bitcoin for the first time, it's trading at the lowest level, around 86, 87K as we record on Wednesday, February 26th, at the lowest level that it has traded since we got up into that 90 to 110 range, right? Bitcoin had traded down into like the 91 and 90K area like 7 different times since it first took that area and rebounded. But now, in this environment that you've been describing, it has traded lower below 90K and it is there. In fact, I believe Quinn Thompson, our friend, a steak dinner over a bet on this, which is fine. But the rest of crypto had already been well off its all-time highs, right? And Bitcoin was sort of like separated from the pack there, and now now it's repriced a little lower. I mean, I still think 87K is no giant cause for alarm at the moment, but it could go lower. How do you think about the crypto reaction here in general, or is that you made the point that risk assets, crypto as an asset class certainly is, and so it's getting affected. But is there, how do you think about crypto in this environment?
I think you want to own crypto when you get comfortable owning stocks a little bit more aggressively. And I'm not quite there yet in terms of being like, oh, it's a great time to buy NASDAQ. It's a great time to buy S&P. I really do think that you need kind of a shift in risk sentiment to kind of be a little bit more aggressive about, adding to Bitcoin longs or starting fresh positions. And so, I'm cautious here. I'm a believer that no position is a position, and if you don't have to be invested, you don't need to be invested. And so, I think it's kind of a wait and see. I think let's say Bitcoin goes to 80K. I think that's totally feasible. I think I'm going to be looking for, positive price action to kind of, guide us. Like if we get through that 90K resistance area, previously support, now resistance, right? That is encouraging. And so, I think you just kind of trade the technicals around. You've got, 200 day or 200 week moving average, kind of a little bit below here. And that should provide some support. And if we go through 90K, it'll start to look a little bit more constructive. But yeah, I think right now, caution is probably the best thing to be, or
All right.
cautious.
That there it is. Beimnet Abebe is cautious. Beimnet, enjoy your time in Colorado, and we'll see you next week. And everybody have I don't know, have a great weekend, and think about Beimnet's theory on the market right now. I think it is such an interesting time, honestly, with the politics, the government spending, the rates, the inflation, the tariffs, the crypto adoption, which is still, I mean, moving fast in Washington as well, the policy stuff. So, lot to think about.
Yeah, I mean, just one last point. I do think that if you're a long run investor and you're thinking about Bitcoin 2, 3, 5 years out, like this, your strategy doesn't change. You're constantly accumulating. You're buying on dips. I'm a
Yeah,
firm believer that Bitcoin over the long run is going to be way higher. But just right here, right now, I think exercising caution is warranted.
there you go. Beimnet Abebe from Galaxy Trading, my friend. Thank you so much.